Hey, what's up, everyone? It's Josh from JoshLM Finance. So, 2025. What a weird year for Bitcoin, right? On one hand, the industry got pretty much everything it had been dreaming of. But on the other hand, the price. Well, it told a completely different and kind of confusing story. So today, we're going to get into it and unravel that exact paradox.
So here's the big question we're tackling today. How on earth could Bitcoin have what was, on paper, its best year ever for adoption and legitimacy, and still end the year with its price way down? It's a contradiction that's left a lot of people scratching their heads, and in this explainer, we're going to break it down piece by piece.
Okay, so first, let's talk about all the good stuff, because honestly, there was a ton of it. From a fundamental structural point of view, 2025 was nothing short of a massive victory lap for the entire crypto space. And that victory lap kicked off with a huge milestone. In October, Bitcoin didn't just break its old records, it absolutely obliterated them, soaring to an all-time high of over $126,000. I mean, a number like that, it set an incredibly optimistic tone for the whole market.
But that new high, that was really just the headline. The real story, the much more important one, was the foundation being built underneath it all. We finally saw crypto ETFs launch and just explode in popularity. We saw new laws around stablecoins, like the Clarity Act, gaining real momentum. And maybe the biggest deal of all, the big money players, guys like Morgan Stanley and even Harvard's endowment, officially jumped into the game.
And look, this wasn't just talk or press releases. The institutional demand was very real, and you could actually measure it. Those new ETFs, they sucked up over 700,000 Bitcoin. Now, to put that into perspective for you, that is roughly double the amount of new Bitcoin that was even created through mining in that same period. A massive, massive demand shock.
So you've got record high prices, you've got huge institutional players buying up everything in sight, and you've got positive news on the regulatory front. I mean, everything is pointing straight up, right? Well, this is where this story takes a sharp turn, and that paradox really comes into focus.
Because despite all those incredible structural wins, the day-to-day reality in the market felt completely different by the end of the year. Which brings us to part two, the very surprising and, for many, very painful price drop.
And this is where you can really see the disconnect. I mean, even after hitting that unbelievable peak back in October, Bitcoin's price fell, and it fell hard. By the time we were ringing in the new year, it was trading way below its highs, leaving a whole lot of people who bought near the top deep in the red. So what happened? Well, it was kind of a perfect storm of classic market forces. You had some wider macroeconomic tensions bubbling up. You had widespread profit-taking. I mean, who can blame them after that huge run-up? And all that volatility led to massive liquidations. As the price started to slide, retail sentiment, which is almost always driven by that short-term price action, turned sharply bearish.
And this whole situation created this huge split in how people were looking at the market. It wasn't just a price drop anymore. It was the beginning of what I like to call the great investor divide. You had two completely different stories being told at the exact same time.
And this created these two competing mindsets. So on one side, you have the institutions. They're strategic, they're slow-moving, and their focus is locked on long-term value and infrastructure. But on the other side, you've got the retail market, which tends to be much more emotional, much more reactionary, and focused almost entirely on what the price is doing today. This was the fundamental tug-of-war that defined the end of 2025.
So what does this massive tug-of-war mean for what's next? Where do we possibly go from here? Let's shift our focus and take a look ahead at what this all might be signaling for 2026.
Now, despite that shaky finish to the year, the long-term institutional case for Bitcoin is still incredibly bullish. A lot of analysts are sticking to their guns, with forecasts of $250,000 or even more by the end of the decade. The logic is actually pretty simple. They believe institutional demand will just keep absorbing way more Bitcoin than is being created. Supply and demand.
However, the more sober, realistic view is that 2026 might not be another year of explosive breakout prices. Instead, it's looking much more like a pivot, a year for more of that structural consolidation, a year for getting that final regulatory clarity nailed down, and a year for big capital to just keep quietly stacking. It's the patient game, and it's the one the institutions are playing.
All right, let's bring all this home. We've looked at the wins, the drop, and the outlook for the future. But what does this actually mean for you as an investor trying to navigate all this right now? Let's talk strategy. Here's your playbook based on everything we learned from the paradox of 2025. Number 1, do not let these wild short-term price swings dictate your entire strategy.
Number 2, you've got to understand that these huge infrastructure wins take time to actually get priced into the market. Number 3, keep a very close eye on regulatory news. It matters more than ever. And finally, be realistic. This is still a volatile asset class, and that is not changing overnight.
So let's go back to that first question we asked. Did crypto actually win in 2025? The answer is yes, absolutely. But it was a structural win, a legitimacy win. And that's the kind of victory you just can't see on a daily price chart, and it's the crucial detail that most people are missing. And this really sets up the single biggest question for the year to come.
So I'll leave you with this. As we move forward, which one of these powerful forces do you think will win out in 2026? Will it be the slow, steady, patient march of infrastructure, or will it be the fast-moving, powerful waves of trader emotion? Let me know what you think down in the comments. And hey, if you found this useful, hit that subscribe button and stay tuned for more clear, no-nonsense breakdowns from JoshLM Finance. Thanks for watching.